Come on in, folks. Come on in. Good morning. Come on in and let's have the show that we deserve. The show that we deserve. It's that good. We deserve it. We really do. We really, really do. It sets us up in the morning, informs us, inspires us. And it happens every day. That's the best part. We do not take a break. We're not lazy. We're motivated. We people are motivated, whatever that means. Let's go on LinkedIn and we're live on LinkedIn. Always very awkward with my hair. There we go, live on LinkedIn. Now let's set this up on WhatsApp and then we will be ready. $184th episode, 184. There you go, 184. Done, folks. I guess I should just check myself. Done, folks. Yeah, this is good. Let me check myself on LinkedIn as well. LinkedIn, what the hell is going on? Okay, I'll have to check it independently. Just 1 second, folks. I don't know if I'm live on LinkedIn or not, because shows I should be live. I mean, sorry folks, this is just a technical difficulty here. What do they mean by connect event? I don't want to connect event. I just want to go to the event. What do I do? Alright, people have started coming in and I'm not sure if I'm live on LinkedIn. What is this? Am I going to be live on LinkedIn today? Where is LinkedIn? I don't understand, man. Just 1 second, folks. Sorry for this. I know you're waiting. Good morning, Nishant, says Mr. Rajakumar. Good morning, Mr. Kumar. I'm so sorry. Just give me a second. Just give me 1 second. I'll try to fix this. I don't know what's happening. This streaming service is giving me a nightmare. Come on. Come on. Come on. Come on. Ma. Go to LinkedIn. So I am live apparently, but I'm not being able to find myself on LinkedIn. You know, that's what's going on right now. Sorry about this, folks. Just 1 second. I'll have to end the stream and begin it again, I guess. But that doesn't happen usually. Very weird. Just give me a second again. Sorry, now I'm in pressure because people are waiting, right? It's usually no problem every day. No, still not here. So I'll have to end the stream on LinkedIn and begin again, I guess. That's what's gonna happen. Time to go live. Sending data. All right, then I guess we won't be able to go live on LinkedIn today, folks. That's not nice, right? That is not nice at all. I don't like it. I don't like it one bit. Let me just give one final try. No, it's not happening. So I'll end it here. I'll go on the other streaming service. Holy shit. Sorry about this. And then I will just put myself there. Just 1 second, folks. Sorry about this. Really sorry for this. Super weird. Super weird. That's the hard part of using free services, right? They screw everything up. You don't have any control over them. And now we are ready. Yeah, this is good. Perfect. Now I'm live on LinkedIn as well. Good, good. So let's begin the show that we deserve. Bum bum bum. Bum 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 bum. Bum 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 bum. Bum 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 bum. Bum 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 bum. Good morning, everybody. Welcome to Thinker's Frequency. We're having such a good time. This is the peak of human civilization. We're working so hard, doing such good work for ourselves, our parents, our kids, our siblings, our husbands, our wives, our friends, everybody. Well, not other people's husbands and wives, I hope. And just when we thought things couldn't get any better, like they couldn't possibly get any better, well, they just did. Call it divine intervention, folks, but things just got a whole lot better. Now we have Thinker's Frequency, our daily mental workout, our daily dose of insights and analysis which don't lead to paralysis right before we punch in. So let's continue with our journey of reading between the lines, things that are especially interesting and important in the world of business and finance. Let's go! Oh, but before we go, we got to follow a tradition, right? You know the tradition. You know the sweet and sacred tradition of the simultaneous sip. We'll all sip something together and it'll bring us good luck, as it always does, without fail, every day. And all you need for the simultaneous sip is a cup or mug, a glass or tank, a chalice or stein, a canteen jug, a flask, or a vessel of any kind. Pour it with your favorite liquid. I like some hot water with black pepper in it. There we go. Nice. Let's do it again. Wonderful. Sublime. You know what the simultaneous sip says, right? You know what it says? It says that you're not alone. It says that we are in this together, which is such a beautiful thing to say. With that out of the way, let's begin. You know what happened? Mr. Arvind Srinivas came out with an analysis of the whole situation. And he has come out with a very, very paper napkin math kind of a situation. He says that if it takes $80 billion to build a 1 gigawatt AI data center. Okay, build and fill a 1 gigawatt data center. Now, if 100 gigawatts of data center capacity is announced, it essentially means $8 trillion. Okay, $8 trillion of capex. So $8 trillion capex, you cannot have a return on that because $800 billion of profit would just be required to pay the interest on that capex. If that capex is debt, you know, it'll be a 10% interest kind of a situation. And if it is a 10% interest kind of a situation, you'll need profits of about 800 billion to just pay for the interest. So there's no way spending trillions of AI data centers will pay off at today's infrastructure costs. Now, the last part is very important. At today's infrastructure costs, maybe the infrastructure costs come down, but at a factor of what? Maybe they go down by half. You'll still need $400 billion in profits to essentially justify the capex for this particular play, right? How much can you bring down the cost of a particular, you know, data center from $80 billion per gigawatt? How can you bring it down, and to what degree? That is the question. So, Mr. Arvind Srinivas, I like this paper napkin kind of a math situation. You know, this is very easy to understand. 10% interest, you know, you have to have $800 billion just to pay off the interest on a particular capex. And if that is the case, it's not happening. Not happening. So the weight of all the capex in AI will essentially, bring it down. That's what Mr. Arvind Srinivas is saying. Or maybe it doesn't happen at all. That's also something to worry about. So that is what the big wig, Arvind Srinivas, Mr. I'm sorry, did I say Arvind Srinivas? His he's the CEO of IBM. I guess his name is also pretty similar, right? What is the CEO of CEO IBM? Arvind Krishna. Sorry, not Arvind Srinivas, Arvind Krishna. He's the CEO of IBM at the moment. Very good paper napkin analysis. Let's see what happens in this particular play. By the way, Dr. Michael Burry also has done a podcast recently. He has talked to Michael Lewis. Michael Lewis, if you do not know, is perhaps one of the best writers, if not the best non-fiction writers ever, ever. So Michael Lewis is the person who's written Moneyball, which got adapted into a movie. He also wrote The Big Shot, which of course became a very popular movie. He wrote The Blind Side, which became a very popular movie, Sandra Bullock. He wrote Flash Boys, my favorite of his books. That also became a movie, Hummingbird Project, not a good movie though. He wrote Liar's Poker, not a movie yet, I guess. And then he wrote The New Thing, very good book, not a movie yet. And then The Undoing Project. Uh, all of these books I've read, I've just loved, always loved Michael Lewis writings. He is a great writer, and he has sat down with uh, you know Dr. Burry. He has sit down. He has sat down. Yeah, yeah, whatever. He sat down with Dr. Burry, and let's see that podcast. I haven't had the chance to look at it as yet, but I think it'll be great, right? That's what's happening in the world of AI. A lot of, uh, you know, market-wide sell-off situation. They say that it's gonna be very weird. MicroStrategy now is worth less than the Bitcoin it holds yet again, right? Bitcoin, as of now, it's slightly recovering, then coming down, and so on and so forth. Silver is continuing to rise, gold is continuing to rise. None of the geopolitical conflicts are getting solved. In fact, the Ukraine Russia conflict is escalating into a full blown European war. So that's what Mr. Putin says. Mr. Putin says that Europe war, it seems that Europe wants to escalate it, and it wants to get into a full scale escalation with Russia. If that is the case, it'll be a very swift end of Europe, because it'll be a very different experience when it comes to Russian conflict with Ukraine, which is a very contained operation. If Europe ends up doing what it's doing, the ramifications of it will be very global and very sudden in nature. That's what Mr. Putin has said. So that's clearly not a de-escalation sign, despite everything what Mr. Trump is trying, right? So Zelensky seems to be taking down Europe with him. Europe has a lot of problems financially as well. UK's economy, you know about it. German economy, you know about it. So a lot of problems when it comes to European economy in general. Let's see how they handle this war situation. Speaking of the war and the geopolitical instability, Indian's oil supply coming from Russia is going up, right? So it's basically coming up. So Nayara, the the joint venture with Rosneft, which is a sanctioned company, is basically doing ship to ship, uh, uh, you know, operations. Ship to ship is basically to mask the final buyer. So what you do is when you're sending your ships, right? And if you do a ship to ship kind of a, transfer, or let's say, what do you call it? Your logistics change, and you're essentially masking who the next buyer is in a way to uh, sort of escape the tariff situation and so on and so forth. So Indian oil supply is more or less where it is, and it's not hit the October peak yet, but it's resuming its highs coming from Russia. So that is happening. Very conflicted situations, very very weird. Uh, But Indian economy in the midst of all of this is pretty green. RBI looks like it's gonna change the growth prospect of the country. So earlier, if you remember, RBI had a 6.8% growth rate parked for India. Right now, it's gonna be 7.5% because of whatever growth rate is happening. So FY26 is gonna be revised. Also, the 2.6% inflation guidance will be changed to 2%. That is essentially also a positive sign. Less inflation, more growth. All these things make a very good case for rate cuts, right? If not for the lower inflation. If inflation essentially is so low, right? And you increase the money supply, inflation could go up. So that sort of strengthens the case yet again. However, the US and Indian trade deal is basically the only binding force which is holding RBI back when it comes to the rate cut situation. So a lot of things happening when it comes to Indian markets are hot. Indian markets are hotter than everybody else. A lot of people are essentially looking at some sort of revival of the banking sector as well, which we talked about. So Yes Bank is going to be back in Bank Nifty, right? Which is obviously good. So a lot of happenings here. Misho is going public, as we talked about yesterday, right? Numbers are out. So that's a macro view of the situation, right? Whatever is happening. Now let's come to the micro. भाई मुझे तुमसे बात करनी है, says Mr. Mahesh Kumar. Okay. Russian crude meanders flows via distributaries, loading to India swell in second half of November as trading concerns change to counter sanctions. Right? Economics. Moving on. SBI, HDFC, ICICI banks directed to maintain additional CET1 ratios. CET1 ratios are basically common equity tier 1 capital ratio of 0.8, 0.4 and 0.2% respectively for the capital conservation buffer, right? So banks looking good. Banks, by the way, are going forward to riskier loans to essentially preserve the net interest margin. It's all a game of net interest margins, right? So they are essentially looking at uh, loans which are slightly risky, which can be better priced, all to preserve the net interest margin, right? So that's what's happening with the banking as well. Very interesting facets unloading. So we've already talked about Indian currency is really reeling under pressure. It's hitting 90 rupees per dollar, 89.9. That's not good at all. Not good at all for anybody who's trying to do business, right? Uh, it's whoever's trying to raise money. As I talked about, I talked to a very legendary investor, not based out of India but of Indian origin, and he said it's foolish to invest in Indian companies because the currency depreciates by 5% every year, right? So even if you do a very good job, the currency will make it half in the next 7-8 years, and that is a real problem. It would have been good to for India to devalue its currency if India was essentially an export-driven country. But India is not an export-driven country. India imports a lot. If it's importing a lot, it's just gonna drain all its forex in imports if the currency is not great. And it's also not good for people who are investing in your country. So you know what happened with Airtel and Nigeria, right? So Airtel is heavily invested in Nigeria. Airtel is a very big company in Nigeria, and Airtel's earnings in Nigeria just disappeared because the currency became essentially half. So Nigerian currency got devalued like anything, hyperinflation and everything, right? So it just became half, and since it became half, the Airtel headquarters earnings, they basically vanished, right? So this is what happens to foreign businesses who are invested in India. If the currency keeps halvening, it's gonna be very 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 difficult for businesses to sustain their investments in the country. So that is not good. Mr. Sumanth Kumar says it's already depreciated 6% this year. Yeah, it's heavy. मिस्टर महेश कुमार भाई, मुझे कान में सीटी बजता है, मैंने आपका एक वीडियो देखा था, बहुत परेशान हूँ. उस वीडियो में सारी इन्फॉर्मेशन है. जो भी मैं बताना चाहता था उन सारे वीडियोस में, जो भी मैंने टिनिटस के बारे में बोला है, आप उन वीडियोस में देख सकते हैं. और उसी वीडियो में एक पिंड कमेंट है जिसमें मैंने सारी दवाइयाँ लिखी हुई हैं, सारा बताया हुआ है किस किस डॉक्टर से आप बात कर सकते हैं, उन सारे डॉक्टर्स का नाम लिखा हुआ है. उन डॉक्टर्स को आप गूगल पे सर्च करेंगे, आपको सारी इन्फॉर्मेशन मिल जाएगी. थैंक यू सो मच, ऑल द बेस्ट. आई एम सो सॉरी आपको काफ़ी परेशानी है, लेकिन यू विल बी बेटर, डोंट वरी. जो भी मैंने सोल्यूशंस बताए आप उनको फॉलो करिए और उन लोगों से बात करिए, आपको अच्छा लगेगा, जैसे मेरे साथ हुआ. That is, of course, one of the tinnitus queries, folks. Ever since I uploaded the tinnitus video, right, sharing my journey, I have been receiving thousands and thousands of messages. Every day I get like 10 messages, 5 messages from people who are suffering from tinnitus, right? People actually go to my music videos and write tinnitus comments. My life has become hell. The only reason I have not deleted those tinnitus videos is because they are helping people, right? So they are helping people, and that's nice. But it's become very very sad. For whatever I do, I just get tinnitus comments, right? It's just very sad, very sad. And I made a video specifically telling people that this is what it is, and please don't contact me for tinnitus because I don't do this, right? And please don't write tinnitus comments on my music videos because it's disrespectful. But I still get that a lot. It's just very sad. But anyway, happy to help, right? Glad those videos are helping people. Let's move on, folks. Sorry for the digression. So, as discussed yesterday, folks, a very, very big situation happened, right? The Sanchar Saati app and everything. It basically helped, it unleashed a huge firestorm when it came to people. So, you must have watched the yesterday's episode, and you must have, noted down what I said. It's gonna be a big privacy concern, overloaded privacy concern coming from big tech companies. Now, these are companies who are actively and, for the lack of a better word, transparently snooping on you every day, every second, 24/7, 365. And these people are saying that it's going to be a privacy concern if these apps are loaded. Now, government has come out with a response. It says that you can delete the Sanchar Saati app if you mind it, but it's got to be loaded because it's for IMEI linking, it's for spam fraud protection, it's spam fraud, reporting to the government, and so on and so forth. So it says report suspected fraud from call logs, report lost phones, verify it's if a handset is genuine, because that's also a big problem, right? Handsets counterfeit operations, check for IMEI number, duplication, and so on and so forth. That's what the Sanchar Sathi app does. And if you don't want these things, they can be deleted. So it's not a permanent feature. But still, there's a whole firestorm around it. And if you watched the yesterday's episode, I told you this was going to happen. This is only going to get heated up because every time you have to try to read in big tech with whatever you're trying to do, you get attacked from all sides. So all the privacy advocates, all all sorts of people are sort of gang up on you. These are lawyers, these are activists who are essentially on the payroll of the big tech companies. So what might seem like an organic outrage, right? It's all manufactured and it's all very predictable. So that's what's happening. DPDP has set a lot of things in motion. When it comes to DPDP, insurance is a very big play. Data breach, data insurance, those products will fly off the shelf because companies will be forced to be very, very careful with data. And in case a data breach happens, the insurance product will be coming to save it. So that is what's happening when it comes to uh, you know, DPDP's introduction. Order on handsets to be preloaded app aimed at curbing frauds, says Mr. Sindhya. He's the minister, right? So that's what's happening. Apple says we're not gonna do it. We don't preload apps, right? That's what Apple says. Chinese companies are also saying that they won't do it. Despite if you buy an Android phone and if you go to any Chinese company's headset, you're gonna get so many preloaded apps already, right? You're gonna get share chats, all of those crap. All of those apps will be preloaded, those video apps and so on and so forth. Like they load 10, 15 apps on your phone, but it will be very difficult for them to essentially load this particular Sanchar Saati app. So this is all pretty pathetic, but it is what it is, right? Let's move on, folks. I told you this was happening. This was gonna happen. Mixed privacy fears, my ass. FICCI has come out with a statement. It says that it wants to lift manufacturing share in GDP to 25%. Right now, manufacturing does about 15 to 16%, right? 25% of GDP. That's gonna have cascading effects. That's gonna have second order effects, contagion effects, which will be beautiful if that happens, because manufacturing essentially leads to a lot of multiplication, right? Multiplicity of rupee. So every time a manufacturing unit is set up, it leads to so many ancillary units getting set up, and that leads to a lot of ancillary units getting set up, and that basically leads to a lot of beautiful outcomes. 15 to 25, so 15 to 17% is right now, and the chamber wants 25%. That is a lot. That is a lot. Let's see how they're able to do it, right? Global matters. Prada has completed the acquisition of Versace. It's a 1.3 billion pound. That is about 1.5, 1.6 billion dollar acquisition. It coincidentally happened, the signing of it, on the Versace patriarch's birthday. Prada is owned by a US based private equity player. It's called Capri Holdings, right? Capri Holdings. Versace was owned by Capri Holdings, and Prada has bought it. So that's what's happening with the fashion industry. Never had anything to do with Versace as yet. Oh my God, Versace shouldn't have been sold. It'll lose its soul. What will I wear? I wish I could say all of those things, but I don't. I can't. Moving on, folks. Europe is looking at banning Russian oil purchases by 2027. Very interesting. This is so weird. Whatever is happening with Europe and Russia and US, everything is so weird. It's so weird, right? And it's just, all of this is gonna lead to things, man, right? This is not just gonna be a contained effect. Everybody knows that. But somehow, it is kind of an unsolvable situation, because Mr. Zelensky wouldn't want to stop the war. If the war is stopped, he's gonna get killed, right? So he will want to continue with the war no matter what. Because what happens when the war is stopped? Just imagine Ukraine after the war is stopped, right? After the war is stopped, Ukraine will end up realizing that, oh, we lost our land, we lost our money, we lost people, we lost everything because of this guy, right? And he's still here. What happens to him? He'll have to have amnesty. He'll have to get amnesty in US. So that is obviously keeping the war on, and let's see how it all shapes up. Moving on, folks. India, by the way, is looking at some nice defense developments. Number one, Arindam, INS Arindam is the third in the INS Vikrant play, right? A very big aircraft carrier. It's close to the joining fleet. No dates as of now, but it's gonna be inducted very soon. As it is inducted, it's gonna signal a newfound, you know, growth when it comes to Navy, Indian Navy. It will really benefit. And the second news is that JSW is tying up with a US company, US based company, a joint venture to, and it's investing about $90 million to start drone manufacturing. So this is private sector drone play, which is really making waves. So finally, some good news when it comes to the drone play, right? Some good news. This is very necessary. We've been talking about this for a very long time, and finally this is happening. JSW making a significant investment in the drone play, right? So they're talking about how JSW scale and everything will essentially look at that. It'll be a very good opportunity to make money if something like that gets listed, or if you can be a part of that through a startup or an unlisted entity or whatever. It'll be a great opportunity for the country and for everybody else. So let's see how that develops, right? Moving on. Pernod Ricard, Pernod Ricard, the French liquor company, has come out saying that India expects India business, Pernod Ricard's India's business will beat US on the back of strong micro trends. He says US, everybody's not bullish. Nobody is bullish on the Western market for liquor, right? Because of the falling liquor consumption. But India sort of is still, it's even Indian market is degrowing, but it still has some room to grow when it comes to the premiumization segment. That's what Pernod Ricard stands for. Pernod Ricard recently offloaded, divested this, what was that? The Imperial Blue whiskey to Tilak Nagar Industries, right? It was about $1 billion deal. So now they're looking at launching Indian origin premium whiskeys and so on and so forth. The chief says that India essentially is a pretty big market. I wouldn't want to compete with my US peers. I'd want to be here. He says India contributes 13% of Pernod Ricard's global sales. Okay. Second largest market after US. India, previously third largest market, outpaced China when it comes to Pernod Ricard's, thing. Some macro numbers he pointed out. He said that India essentially is looking at about, let me just give you the macro numbers that he pointed out. Yeah, an addition of 20 million young drinkers every year who prefer premium drinks over non-premium drinks. So 20 million drinkers, addition of 20 million new drinkers. 20 million is about 2 crore. 2 crore new drinkers every year, he says, right? That is the growth, that it's the new drinkers that we are adding. And he says that since India is non-premiumized as a market whole, the premium segment obviously gets a very big growth aspects. And that's what we talked about. Whatever money lies in the beer, the alcohol play is in the premiumization segment of it, because the overall alcohol consumption is collapsing worldwide, right? How interesting is that, folks? Moving on. Speaking of interesting, do you know what's interesting? The K-pop fever in India, K fever, Korean beauty fever. A lot of Korean brands and Korean beauty brands are essentially looking at making their space in the Indian play, right? If you look at some numbers, did you know that the K beauty market is essentially about $400 million right now. Right now, it's $400 million, and it's gonna be $1.5 billion in 2030. So K Beauty, 400 million to 1.5 billion dollars in just next 5 years. That's huge. That's incredible. I I feel a bit weird about this, because beauty is subjective and whatnot. Beauty lies in the eyes of the beholder, but a lot of this market is actually going towards males as well. Right? Well, I'm all in for the East Asian, beauty when it comes to females. This whole male market is very, very androgynous, very, there's a particular kind of a surgery which is happening in Korea, which is getting very popularized, which is basically this particular, the whole upper lip, over the upper lip, whatever it's called. I'm missing the word, but taking the beard away, the mustache away, and joining it and making it prettier. Basically, it's just very, very feminine. Very feminine when it comes to how Indians have been looking at male beauty or whatnot. So seeing people turn like that will be very weird. Very weird, right? But it is what it is. Korean beauty, uh, growing at a CAGR of 25.9%, right? A lot of brands: Cosmax, Kind Life, Gino, Monica Alcobev, KTNG, and Amora Pacific, which is by Mintra. A lot of work, a lot of money flowing into Korean beauty products, and it's just very weird. Not just Korean, by the way, Thai beauty products are also, because they are pretty similar. So that market is growing, and you can see how. So the numbers are pretty amazing. Moving on, folks. What about you? Do you like these K-pop kind of male beauty? Does that? It's just very weird, right? It's very weird. All those guys dressed like women. I mean, looking like women. It's just very weird. Anyway, I hope I'm not sounding politically incorrect or whatever. It's just a perspective, man. Don't beat me up for it. Anyway, moving on. Omnicom restructures India leadership team after merger with IPG. So we've talked about advertising agencies, right? Creative advertising agencies. Pretty. Can you share the patrons link? Says Mr. Sumanth Kumar. It's in the description of this particular video. It's in the description of every video. There's also your name, Mr. Sumanth Kumar. So you can look at that link. It's also on LinkedIn. So every time we post on LinkedIn, this whole thing, same text gets loaded. So it's there. So the ad agency business is basically looking at a paradigm shift and a march towards irrelevance because of the whole changing ecosystem when it comes to advertising and branding in general. So if you look at ad agencies, ad business model, it's all about creating a brand. It's all about telling a story, right? Selling by brand building as opposed to selling by performance marketing. So now, since everything is changing when it comes to sales of products, advertising, branding, and so on and so forth, from branding, people are moving towards performance marketing as the primary thing. So the TVCs, the TV commercials, they have gone out of business, and those commercials have been replaced by viral marketing campaigns, which is more of a hit and miss kind of a thing. So it takes a lot of iterations, it takes a lot of attempts, right? So it's not one iconic campaign that these companies are trying to make anymore. They're basically changing, and that is leading to a lot of consolidation when it comes to the advertising industry. We've talked a lot about this. We've had a deep dive on this. Even Dentsu is looking at selling its outside business. A lot of WPP is worth what it was like 30 years ago, and so on and so forth. So it's very, very horrible. Omnicom is basically merging with IPG, keeping the Lintas brand intact. Linta is a very iconic ad agency, very iconic ad agency. They've done a lot of great work, right, in the past, and they're known for a very methodic, decent messaging, right, instead of a very branded, new alpha lingo kind of a play. So iconic brands haven't been created by those people merging. A lot of consolidations on the way. Let's see what happens. Moving on, folks. We've talked about how Airbus is dealing with a very weird situation right now. It is dealing with a, a few problems when it comes to its best sellers, the A320s, right? Airbus to check A320 jets for panel defects. There is a panel concern. We've talked about this, the whole radiation leading to defects in panels, sometimes too thick, sometimes too thin. Now, Airbus is also racing against time for delivery of its 625 jets. Now, this particular play is going to have some ramifications when it comes to that delivery timeline, and how Airbus manages this particular problem will be something to look for, right? For now, Airbus is in a very comfortable position because Boeing is imploding, right? Boeing is essentially in a very, very bad state, and that is leading to very big problems. But good news for Airbus, right? So, what's the best thing that can happen to your business? We've always said Thinkers Frequency. Viewers of Thinkers Frequency would know. Let's have a recap. What is the best thing that can happen to your business, folks? What is the best thing that can happen to your business? You know the answer. We've talked about this. We've had very, very deep conversations around this, right? What is the best thing that can happen to your business? Come on, say it. Say it, folks. Yeah, you know it. I know it. I know that you know it. I'm just waiting for you to say it. I'll take a sip. Competitor gets screwed. Well, Mr. Sumanth Kumar has put it rather unflatteringly, but that's correct. Your competition gets just implodes, right? And that's the best thing that can happen to your business always. Ray Kroc, sir, was right when he said, competition, you know, I'll make him drown. I'll make him drown. Uh, if he's drowning, I'll tie an anchor on his neck so he drowns faster. That's Ray Kroc, the founder of McDonald's. Uh, Mr. Sumant Kumar says, why no one is talking about AI crash, right? I don't know what happened to the investigation. Oh, nothing happened to the investigation, Mr. Sumant Kumar. So they found out nothing, and that's it. That's the story. That's the story, morning glory, right? Competitor dies, says Mr. Rajat Mittal. Mr. Manjunath Madhubal says government policies which are pro-business. What? That is the worst thing? That is the best thing that can happen to your business? That's a sweet view. Government policies. Government policies cannot be just good for your business. It'll be good for everybody's business. And what is good for everybody's business cannot be good for your business, right? Yeah, even though the rising market lifts a lot of boats, you need something special to move forward. Let's go ahead. 2 minutes to spare. Micro dramas keep audience glued to the screens. Viewership base surges in less than a year. A lot of activity when it comes to micro dramas. A lot of VC action. A lot of positive, stories getting spun in the media about micro dramas. All of this is a bunch of bullshit, I think, right? There is no way for micro dramas to essentially make money when it comes to actual monetary value. Yes, people will be glued to the screen, but unless it's advertising that you're looking at for revenues, right, which is a very shitty way of making money when it comes to art projects, right? Micro dramas are just a money pit yet again, and they have no defensibility. They have no case for a prolonged engagement. These things glue and then people go out. They are essentially competing with reels when it comes to entertainment. So while they could be engaging people for a little while, it's practically impossible for people to pay for it, right? As soon as these people begin with a paywall kind of a situation, people will just forget about them and swipe up like they swipe up a reel. But till the time all this let's say, positive sentiment in the VC community stays, a lot of founders are gonna be making money. They're gonna be raising money because they need it, right? Self-preservation is an instinct they possess. So founders are saying, founders of micro drama apps estimated the current market size of this segment at 400 million to 500 million dollars. So they are saying 4,000 crore rupees. They expect this to grow to 10 billion in the next 5 years. So from $500 million, they're saying that the micro drama play will be worth $10 billion. Now that has to be the most unfunny joke, right? It is a joke, but you know why this is spinning, right? Because ShareChat wants to go IPO. Now ShareChat is the bubble of all bubbles. This company has never smelled money even from afar. They have burnt money by thousands of crores year on year while getting valued at $5 billion, right? At the peak, having raised about $2 billion or whatnot. That company is now positioning itself as a turnaround story, right? By selling subscriptions to, the streaming links, if you know what I mean, the whole streaming play. That's where most of their money is coming at. Their social network is not making money, but they're trying to spin a new story around micro dramas as they go public. So this is just a PR spin. There's no money to be made when it comes to micro dramas, is my reading of the situation. Let's see how this plans out, right? Let's see. Moving on, folks. Do you think micro dramas are going to be making money? Have you ever talked to people who watch micro dramas? Understand what they think about micro dramas? Have they ever paid for micro dramas? Would they ever pay for a micro drama? Right? Anybody who'd like to essentially pay for completion of that story? There is Cuckoo TV as well, says Mr. Abhishek Sharma. Yeah. So all of these people have literally gone crazy over micro dramas because that feeds the monkey, right? The engagement looks good, and on paper, engagement is a good story. But when it comes to making money, and that was the story which ended up helping ShareChat raise all the money it did, right? But if you look at its revenue numbers and its profitability numbers and its server bills, they've just burnt money like it's a bonfire, right? For micro drama, a lot of ads on Instagram for it. Yeah, they're promoting micro dramas. They're trying to bring people through micro dramas. Very, very weird situation. Anyway, moving on, folks. We've talked about the DPDP thing. Cyber insurance, we've talked about it. Kerala emerges as a healthcare hotspot. Big money checks in as Kerala emerges as a hotspot for healthcare. Private equity spent $700 million in just last 2 years to acquire hospitals and devices firms. Why do you think Kerala is getting so much of money when it comes to healthcare, hospitals, devices? Why is Kerala seeing so much of private equity action? Let's go. Time to share your thoughts, folks. What is your hypothesis? Why do you think Kerala is getting so much of money when it comes to healthcare? This is while I take a sip. It's epicenter for viruses, says Mr. Sumanth Kumar. Okay, that is one way to look at it. Any other thoughts? Epicenter for viruses could be due to NRIs. That is a good question. Good thought, good thought. Any other thoughts, folks? Any other thoughts? NRIs. So I think Mr. Abhishek Sharma has hit the spot. It's the epicenter of viruses. I would not say that can be the reason because, how does that matter? I mean, epicenter of viruses. The world is a connected place. Every head place can be an epicenter of a virus. Kerala gets a lot of NRI traffic, low cost healthcare driven by NRI and their network. That is actually the right way of looking at this situation because Kerala has a lot of expat population, directly and indirectly. A lot of people from Kerala have, established themselves abroad. And that basically leads to a very active and healthy pipeline of customers when it comes to healthcare operations, right? Offers good money making opportunities as well, says Mr. Abhishek Sharma. Yes, medical tourism is it's a pretty big activity when it comes to Kerala as well. So Kerala is becoming a very big hotbed for a lot of medical tourism and the likes, which is why it's seeing so much of private equity action, because this particular play, the healthcare play, is going to boom in the country, right? What India is trying to do is trying to mobilize its tourism cell through uh, medical tourism. So it's a strategic priority for the country to boost medical tourism, and that's what Kerala is, especially because Kerala is also a tourism hub. So it is said to be a very attractive place for people from abroad and India, of course, and that sort of gels very well with the whole medical story, right? So it's huge. If you look at top PE deals, Blackstone TPG KIMS about $400 million, KKR Baby Memorial Hospital $300 million recently, right? Somerset Indus Capital Partners, Cyrex Healthcare, ICICI Ventures, Dent Care, and so on and so forth. A lot of uh, action, private equity action. I guess what Suman ji means is that it's generally the place for foreign infections to come. Yeah, I get that, says Mr. Rajat Mittal. I understand that. But what I fail to understand is the link between that and more private equity action when it comes to healthcare. So let's say if a lot of uh, you know uh, viruses, or let's say a lot of infections from the west enter through Kerala, right? Can that be the reason for more action when it comes to private equity, or more hospitals? Because you know you have a limited capacity, right? You have a limited capacity, limited set of people, and so on and so forth. uh, and wouldn't viruses be traveling everywhere, not just Kerala? Given the, if it's a virus situation, wouldn't you know Kerala also has a very strong medical professional base, caregivers and doctors. Yeah, that is a very good idea. Kerala is also a hotbed of very good nursing and healthcare professional ecosystem. So that is definitely a fertile ground for making more investments. Coming to what Mr. Sumanth Kumar posited as a reason, right? I Well, it could be actually, if you think about it deeply. Maybe some super rich guys said it's enough and time for infections to stop, says Mr. Abhishek Sharma. Uh, I mean that's that, but it's an interesting thought. Kerala definitely a very big venue. If that was the case, actually, a lot of foreign uh, incoming places, like hotbeds of tourism. So Kerala is not the only hotbed of tourism, right? There is a lot of uh, tourism, or let's say entry of Indian tourism through Delhi, but North India is not facing so much of private equity influx when it comes to hospitals and so on and so forth. Even though there are so many big facilities, right? So a lot of factors, but somehow I'm not being able to connect that link. However, it sounds plausible now that I think about it more deeply. So cheers to Mr. Sumanth Kumar. Uh, Fireside Ventures has closed the Fund 4 at $253 million. So they'll have $253 million to invest in 25 to 30 companies with a focus on Gen Z alpha consumption patterns and also AI. So about $10 million per company, I guess, right? $5 to $10 million per company. Fund 4. Now, what needs to happen, right? Some of that money from Fireside Ventures to come here uh, at what we are building in AI. Let's see how that happens, right? It'll be amazing. Moving on, folks. Kerala. Nvidia has invested $2 billion in Synopsys. Let's move on. Vedanta may use ESL's proposed fundraising for parent company's debt. Now, Viceroy is not stopping writing articles about Vedanta. It says that Vedanta's fundraising, the ESL fundraising, doesn't have the money, and KTM's debt, the parent company, it really needs. So ESL Steel's attempt to raise 2,000 crore shows the collapse of the deleveraging strategy. Funds will likely be funneled to VRL to meet upcoming KCM investment deadlines. So KCM needs some money, and Viceroy says that their deleveraging strategy is coming to the end, and Konkana Copper Mines doesn't have the money, and its investment deadline will approach. So this ESL money is actually going to be funneled to VRL so that they can invest in the KCM thing, and it's all a Ponzi. And they're saying that it all come down, right? Mandatory mining payments and penalties destroy ESL's margin before a single rupee reaches the bottom line, making the entire company structurally unprofitable, says Viceroy. So Viceroy is not stopping its attacks on VRL. VRL's deleveraging strategy, its demerger, everything. Whatever VRL is trying to cut debt, pare debt, Mr. Anil Agrawal led group, it's continuously getting attacked by Viceroy. Viceroy had placed a shot on VRL, a pretty big shot that didn't do anything, unfortunately. Maybe they're going to lose their shirts on it, but they're still active. So, kudos to the effort, I guess. Kudos to the effort, guys. Moving on. Bad air fuels demand for wellness focused homes. Now, this is a very, very bad news for people living in Delhi. So, what they're saying is that the real estate developers who are selling homes and building homes, they are positioning air purifying solutions as a part of the real estate projects. Do you know what that means, folks? Do you know what that means? These people, smog guns, dust barriers, even air purifying plants are being, uh, you know, are becoming a part of the structure of their sales pitch. That this particular colony, this particular society has these things. What does it tell you about Delhi? Can you imagine? Do you understand what this means, folks? If real estate people who are building and selling housing projects are incorporating these particular things as a part of their pitch, what does it mean? Can you guess? Can you guess what that means? It's a very important question, and this will essentially help you predict things, right? That means no plans to solve air pollution issue, says Mr. Sumanth Kumar. That's 100% right. This means that it's time to just get the F out of Delhi, because real estate guys who are very, very good predictors of the future of a particular city are basing in their thesis that air pollution as a problem is going to exist, right? That is a very, very bad sign. That is a very bad sign, folks, right? That is just pathetic, whatever is happening in Delhi. If people are beginning to just factor in air pollution as an ongoing issue and as a continuous issue so much that they are willing to create their space as a differentiated place from the city when it comes to air pollution, this means that this problem might be here to stay, which is very, very weird. Now, this is something that I said, right? How long term can you be when you're talking about air pollution and people's will to solve it? Because this problem has been on for 15 years, right? It's not a recent problem. And what do you think about the real estate play? Why doesn't Delhi's real estate crash? That's what I said. Delhi is doomed. Looks like there's no political will, says Mr. Abhishek Sharma. That's exactly what it seems like when real estate players essentially just openly admit that, oh, this is a feature of Delhi. The air is dirty, it's gonna be dirty. Here, in this particular housing project, we're gonna have smog guns, we're gonna have air purifiers, the whole building of it. We're gonna have dust control and so on and so forth. That is fucked, man. That is just doomed, right? That is very, very bad news for everybody who's made this city their home. Holy shit, man. Holy shit. Moving on, folks. There's a report says 6,300 startups shut shop till October this year. 6,000 startups. As in October, 31,004 recognized startups have received 4,147 recognized startups have received certificates, wherein eligible startups can, avail the norms and so on and so forth. As of this moment, the country has 1,97,000 recognized startups, right? Out of which 6,300 have officially shut shop. So, officially shut shop doesn't mean that only these many startups have failed. That is obviously not the way to read this. Shutting shop is like when the company essentially got closed. Now, that is a very, very hard thing in India. And if that is happening, it's very weird. Speaking of what is very not very weird, it's something very awesome. Chota Bheem Maker, right? Chota Bheem Maker, Green Gold Animation, creator of Chota Bheem television series and Krishna series, is seeking to raise 250 crore at a valuation of 800 crore to accelerate the next phase of expansion. Hyderabad-based studio employs 500 people and it's looking at raising 250 crores. How does that make you feel, folks? This makes me feel very nice, right? This is going to be one of the very few and first small wins of the animation industry of the country. We need all the money that can go into this particular play, animation, gaming, and so on and so forth. Because as the film industry declines, right, and it will decline, it is declining. These ancillary industries have a lot of scope of exporting Indian culture, Indian history, and so on and so forth. There's the soft part, the soft muscle, right? As Bollywood declines, uh, it's gonna be amazing, and I'm very, very happy for these guys. The 2-decade-old company is open to a change in ownership if it supports long term. We're open to controlling investor if there's a strong alignment. So they're essentially even looking at selling majority stake, which is sad, but whatever they've achieved is just beautiful. Mr. Abhishek Sharma says, "Bhim ki shakti dhoom machai." That's awesome. That's awesome. We need more of such animation companies and gaming companies in the country. This is very, very good news, folks. I just hope they don't end up selling the controlling stake. They stay in charge, the 2-decade-old company, and they lead to the next phase of expansion, staying in control. That'll be awesome for the country and, of course, for the company. So, best wishes to those guys. All the luck to them. All the luck. Right? Moving on, folks. Nifty likely to rise 13% in 2026 from here on, says the Japanese research guys, Nomura. 13%. Nice. Moving on. We've beaten the index. So if you look at Thinkers Frequency Index, folks, right? If we made an index of whatever we talked about, right, we would have beaten everybody. So all the bets that we placed, like in the first, we've done 184 episodes, so that's half a year, right? We talked about defense. We talked about avoiding IT. So it's not just the money you make, right? Money you don't lose is also very important. So avoiding IT, banking, avoiding in the first half, getting in the second half of these 6 months, right? FMCGs, avoiding in the first half, getting in the second half, right? So banking, IT, FMCG, cars, right? Then we talked about Ather was one of the, not a sectoral pick, but one pick that we talked about. Then we talked about the whole Shelly engineering bit, the plastics play because of the what is that? The semaglutide play, right? uh, so that we checked 6 months, it's gone up by 50 to 60%. So every bit of things that we've discussed for these 6 months, right? Even though we've not been investment advisors, right? We've just discussed the macro trends and we just try to predict the future. So most, not most, all of our bets have panned out in the 6 month horizon, right? Gold, we talked about gold. You see what happened to gold in 6 months, silver in 6 months, right? Every bit of it, right? We placed a few shorts as well, right? We said Ola is gonna not be happening. That turned out well, right? Lenskart, we said it's overvalued. That has not panned out yet, but it's too early to say. So we've done phenomenally well. All we need to do is just continue with the skill of looking into the future, predicting the future, and that'll be awesome. Mr. Abhishek Sharma says, as a next step for Thinkers Frequency, let's have the Thinkers Frequency Index. We should do it. We should do it, right? We should definitely do it. That's gonna be, and that's what I invariably do. How well are we doing, right? Are we actually making a real progress intellectually? That is the whole play. Otherwise, what's the point of sitting together for an hour every morning, right? It's just very difficult. But only if it's actual progress that's getting made, being made. That's when you know that you're doing something really special. Shapurji Polanji Group tapping banks to refinance the 2,000 crore loan. Tweak plan move to help avoid costlier private debt. Banks show interest after asset level changes better show. Very weird situations happening with Shapurji Palanji Group. But for now, things look better. We discussed this yesterday, right? They are being able to raise a debt at slightly lower interest rate. They were hitting the private market at very crazy interest rates. Now, change in plan. Moving on, folks. Government eases small company rules, lowers compliant burden, right? 151,000 registered companies in April to November. LLPs surged too. That is obviously a very, very good news. Very good news, right? Let's see how that functions. Rare earths, we've talked about rare earths, we've talked about FICCI, we've talked about tariffs, and there we come to the end of Thinkers Frequency, the 184th episode of Thinkers Frequency, right? A daily mental workout, a daily dose of insights and analysis that don't lead to paralysis right before we punch in. It's 9:24. We're gonna punch in anytime soon. I wish you a beautiful day personally and professionally, and I'll see you tomorrow, same place, same time, hopefully. Please support Thinkers Frequency with that patrons link. We need to pay the intern. That costs $7,500. $7,500 we need to manage every month. I'm not buying the premium plan as of now. When I'm gonna get a lot of requests for the TV thing, that's when the whole panel discussion play. That's when I'm gonna have the premium play. Till then, 7,500 is our burn. So support it with the patron program, folks. I should thank Mr. Raju Kumar, Mr. Mahesh Kumar, Mr. Sumanth Kumar, Mr. Manjunath Madhubal, Mr. Rajat Mittal, my brother, Mr. Abhishek Sharma, and everybody else who joined. I hope you had fun. I hope this added a lot of value to you. Definitely added a lot of value to me. See you, folks. Please take care. Bye-bye.